Hey guys, what is up? It's Dusty here and welcome back to another crypto video. And in today's video we have a couple of very important things that need to be discussed, as a very important deadline is coming in very shortly. Actually, the gears have already been set into motion for this specific thing, and it could change quite a lot. Having said that, guys, if you're enjoying these daily crypto videos, make sure you go ahead and press the like button on this video, as it greatly helps out. And also, if you're looking for an exchange to trade on, make sure you check out the description down below and check out, for example, Bybit, as you get a couple of crazy bonuses using that exchange. Now let's dive right into our first most important thing, the FOMC meeting. Now, as you guys probably know, I'm here over in Greece, so I don't have the best of recording setups, but, well, I have a camera, I have a microphone, and I think it'll do. What is happening with the FOMC meeting that's about to start, I'm going to say tomorrow here, is they're going to be discussing the interest rate policy over in the US. And the reason that this is important is because, well, the interest rate combats the crazy inflation that's going on. We've had crazy inflation, some 40-year record-breaking numbers, and to combat that, to make sure things don't keep getting more and more expensive, well, they increase the interest rate. We talked before about how you can stimulus whatever, the economy by lowering the interest rate time and time again. By upping it, you're basically pushing yourself into a recession, but logically, you're also decreasing consumption now by increasing the amount of people that save. Let's say it like this. Let's say the amount of percentage that you get in your savings account is 1%. What is your probability of saving? Well, it would be higher, your probability of saving, if the percentage that you were going to get is like 7%, for example. Every single point upwards leads more people to save money, or at least extend consumption into the future. They basically say, you know what, I'm going to not expend now, I'm going to do it later. And that basically means, well, since they're not buying and hoarding like crazy, well, the inflation goes down as people have to produce less. And actually, innovation as a whole, it actually lowers logically, because if you want to take a loan for your business and all of a sudden the interest you need to pay on that loan is, instead of 3%, it's 7% all of a sudden, well, you're less likely to take that loan and expand in your business. Just want to give a little piece of context for that. And even though I've covered this before, right, hopefully you guys are not completely new to exactly how these FOMC meetings work. What is basically happening tomorrow is we get the data about how much percent they're going to be increasing the interest rate with. Again, it's already pretty known that it's going to be an increase in interest rate. The only question is whether or not it's going to be 0.75%, 1%, or even 0.5%. But the highest probability is 0.75%, which is a ridiculously high number for a 1 month thing. Now guys, this number changes quite a lot though, in the sense that earlier it was predicted that it was surely going to be 1. That was actually for a smaller part of time though, because it quickly shifted to saying no, it's most certainly going to be 0.75. But as we saw last month, the prediction was 0.5. It turned out to be 0.75. There's a little bullish and bearish side for both though. If it was 0.5, well, you're not combating inflation enough, because people are still going to spend heavily, the business is going to expand, and well, things are going to go too hard where, well, the inflation is just going to keep rising. 0.75 though, you're decreasing all the good stuff too severely, and so you're going to hit a recession really quickly. As everybody's going to stop spending, innovation is going to stop, things are going to get really, I guess, quote unquote cheap, but your production is going to deteriorate significantly as well, which is bad for the economy, depending on how you view it. Having said that, Bitcoin right now is at a really crucial spot. It's actually at $21,000, and as you can see, it's actually a previous resistance that is now acting as support right here over the last couple of hours. And honestly, the prices are acting pretty significantly different from what I had anticipated at this moment. A little bit earlier in a video, I actually basically called out for you guys that the S&P and Bitcoin were moving in unison quite nicely. And that was the case for a long time because, well, whenever there's these very important inflation or interest rate announcements, they usually work together quite significantly because, well, it affects them both in the same way. The reason this is the case, by the way, is because Bitcoin has not taken its role yet as an offset. Some people are buying Bitcoin as an offset to their stock portfolio, but the majority of people are buying it as an investment vehicle to make gains on, with no real further underlying idea than that. Not enough people are saying, hey, I'm buying Bitcoin because the entire dollar is going to zero, or because I really want to have this as an offset to my traditional portfolio. And people are, again, as I said, but not enough. The majority of people are just buying it for the sake of, well, I want to hold some Bitcoin. And if I make money on that, I'll cash it out for some dollars. Which is ironical because it's kind of the opposite in essence, but all right. One of the, I guess, patterns that we've talked about before, the head and shoulder pattern, is actually continuing on pretty much like we expected it to. And honestly, right now we're forming the bottom, which I had anticipated we would form, which was roughly at around $21,000. So that, I guess, entire call is now finished. Also, what we covered about a day and a half ago, this little pattern that was forming, we have now officially broken down. A little update for you guys. We actually got the confirmation for the downside as well. And as it currently stands, we are, again, facing this support at $21,000 exactly. There's another, I guess, pattern we can see in this, though, which is one that has not broken down just quite yet. It's a negative, or I guess descending channel here. You guys remember how we talked about these channels, right? We usually see the bullish side if it's combined with an RSI like this, as again, RSI is flipping into oversold territory, looking like a good buying opportunity. Then again, there's one negative factor that I'm actually noticing, and again, this all coincides with the FOMC meeting tomorrow, as people are most likely anticipating some very negative results, which is what's kicking this bull run in the bullocks a little bit. We talked before about how Bitcoin has continuation patterns that usually play out, right? Again, you can just see the same exact thing developing over and over again. So whenever the exact same thing happens over and over, why expect a different result, right? Kind of, if you guys understand my drift. In this sense here, what we saw was Bitcoin ranging at a certain spot. It broke down though. At the same time, the RSI broke down. What we're seeing right now, again, is Bitcoin ranging with one quote-unquote fake breakout before coming back into range, with the RSI still continuing to grow. And this could be an interesting break as we near that counterpoint, all right? It could be an interesting break because then at the exact same time, Bitcoin is going to fall towards the bottom of this channel again, going towards 19,000, you could call it box channel, doesn't really matter, $19,000, and then potentially break through the same moment that the RSI, for example, breaks through as well. My mouse is lagging a little bit, not exactly sure why, but you guys understand what I'm trying to say, right? That could happen at the exact same moment, and it just depends a little bit on what we get out of the FOMC meeting, whether or not this negative result will play out. The bullish result is basically that the crypto market has right now got a little bit of a bear trap, right? We got a bullish breakout. Everyone starts to get bullish, but the bears want to take us back a little bit. Again, we have so many bottom indicators, the pi cycle bottom, the RSI, the 200 weekly moving average. We talked before about how closing below the 200 weekly moving average was not the most bullish of moves though. It actually can be seen right here. We had ourselves the close below the 200 weekly moving average, which leaves us to not be as bullish as I would have liked us to be. But honestly, that could also just be some very, very short-term price action, as again, we head into this FOMC meeting, which most people perceive to be bearish. It could be that after the results are published, we get an initial little dump before a big spike, as again, the bottom has been set. And I don't honestly think that even though we can definitely go back to 19,000 any one of these days, it's not too crazy. I've been shouting this out every single day as well. I honestly don't expect us to go lower than $19,000, but as a baseline, I've set 17.6 thousand, which is basically the bottom that we hit, the lowest points of this bear run. And the reason I'm saying that is because we made a beautiful bottom at the 0.236 Fibonacci, right? 0.236 Fibonacci, beautiful bottom, $19,000. It's also exactly the market top of 2017-18. I just think there's too much buying pressure at this exact area to really get ourselves a close below that level. We can get an outlier at 17.6 again, like we saw before, but really a close that low. If it does happen, I honestly expect $16,000 for Bitcoin next, and it's not impossible. Keep that in the back of your head. The bear market is not over just quite yet, even though I remain ultimately bullish all the time, and I'd rather buy Bitcoin than sell. Same thing goes for my XRP, same thing goes for all these others. Honestly, let's prepare for tomorrow. Negative things can happen. Very often these meetings are met with some negative price action. We can see this just for fun's sake, for example. Let's go back to June 14th and 15th. To give you guys a little bit of reference, right, we can see here, these were the days leading up to the June 14th, 15th. And we have ourselves the 14th here, the 15th here. Can we say this is particularly bullish? Well, you can say that the 15th, surely the end day was significantly okay, but the days before, significant dumps, the days after, significant dumps, and then a little while afterwards, though, a couple days afterwards, you can see some nice little recovery rally as we pumped on Bitcoin 40% in the month after that dip was made. So right now, again, I'm saying for the short term, be cautious of this specific break at $21,000. Be careful for whatever results come out tomorrow, and an initial dump right afterwards, depending on how the results are perceived. But I still believe that the moment that a dip is reached, which I don't think it's going to be lower than $19,000. We're going to have a very significant recovery again, which could be along the lines of 40% yet again. But yeah, that was it for today's little crypto video. Hopefully you guys all enjoyed it. If you did, make sure that you press the like button and subscribe. And if you also want to be more updated on whatever I do in a day-to-day life, let me quickly refresh this. Make sure you go ahead and check out my Instagram. A link will be down below for that, or just type it in. Can we refresh? Ooh, it's a little bit slow. Make sure you go ahead and check it out. I'll post a lot of stories on here and whatnot. And I'll see you guys again in another crypto video later today.